right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Mawson Infrastructure, stock ticker MIGI. They are a Bitcoin mining company. Now, we talk about Bitcoin and Bitcoin miners all the time on this channel, so if that is content that you're interested in, please remember to subscribe to the channel and hit the notification bell. Most of all, if everybody could smash the like button, you guys have been doing a great job of that lately, and it really helps the channel out a lot, so I appreciate that very much. I want to talk about Mawson because they put out their second quarter earnings report yesterday. So I read through their quarterly report that they filed to the SEC as well as listened to their conference call. I had a few specific questions going into that. So I want to go through the answers to those questions and more. So let's see how Mawson is doing. It is Tuesday, August 23rd. So at the open here, Mawson is relatively flat. It's a little bit in the green. That's fairly consistent with most of the other Bitcoin miners. So it doesn't look like this earnings report has had a big impact one way or the other yet. This came out last night after the closing bell. One of the main things I want to point out is they are now trading at 76 cents. They were as high as $17.25 within the last 52 weeks. So that's their 52-week high. So their market cap is around $55 million. So that's going to be important later. This is right now a very small market cap company. Okay, let's start out with the press release itself. Mawson Infrastructure Group announces financial results for second quarter 2022. So before I read this, I'm going to tell you the three things that I had in mind, just having done deep dives on Mawson in the past. This is what I wanted to see. Number one, what's their cash flow, cash deficit situation? They've been having a cash issue. So I wanted to see an update on that and then have them address how they're going to handle that going forward. Number two, what was their July Bitcoin mined? Because they have reported their mining results operationally every single month all year. They reported June really late, and now they have reported July so far not at all. So are they going to address that in this update? And then number three, one of their largest co-hosting customers is Celsius Mining. Now, Celsius Mining filed for bankruptcy. So I wanted to hear more about how that's going to affect their business or impact their business. So Mawson Infrastructure Group announces financial results for second quarter 2022. Q2 2022 revenue, $19.8 million. So that's up 236% from Q2 2021. Q2 2022 gross profit, $5.4 million. That's flat versus last year. Okay, they mined 490 self-mined Bitcoin produced in Q2 2022. Then they say Mawson has approximately 40,000 ASIC Bitcoin miners deployed across its self-mining and hosting co-location businesses. So I'm going to dig into that more because they talk about 40,000 miners deployed. But as we dig into this, it doesn't seem like the numbers add up on that. And you'll see what I'm talking about. I'm going to address that specifically. So then they said Mawson Energy Demand Response Program participation commences. So it looks like they're kicking some energy back to the grid and they're getting compensated in some way for that. So that will help them going forward. $10 million in new capital raised in July to continue to build out digital infrastructure, potential strategic transactions, and for general corporate purposes, including working capital. So if you remember, one of my three issues was liquidity and their working capital and their cash flow deficit. So here's something that they've done to address that. This is $10 million. We're going to talk a lot more about that because their problem is actually a bunch bigger than $10 million. This is their 2022-2023 strategy. So this is what they hope to do. Expand existing self-mining operations from the end of July hash rate of 1.7 exahash to our anticipated 2.3 exahash by Q4 and onto our anticipated 5.5 exahash in 2023. So my question is going to be, how are they going to get there? And again, this all relates back to their cash issues. So in order to do that, they're going to expand Mawson's hosting co-location business from 1.8 exahash online at the end of June 30th to 3.0 exahash by Q4 and 6.5 exahash in 2023. So I will tell you, and if you watch all of my deep dive videos, I am not a big fan of the co-hosting location business. It tends to break even at the absolute best so far. Maybe in the future, that is going to be something that makes money for these companies. But right now, none of these big companies that are hosting for other companies are really making any money at it, materially speaking. It's a lot of extra infrastructure, and that could help them over the long term. because one of the ways to scale up is through supplementing your income through hosting other companies' machines while you continue to grow. And then, maybe their 5-year plan or 10-year plan is to switch all that out into their own self-mining machines. So there may be reasons for that, but in the short term, it is not a cash flow positive thing for almost all of these publicly traded Bitcoin mining companies. Okay, continue to develop to the company's Georgia, Pennsylvania, Texas, and Australian Bitcoin mining facilities. Continue to evaluate opportunities to decrease the overall cost of Bitcoin production. We're going to talk about that because their cost of Bitcoin production is an issue. And then continue with our strong ESG focus across our business. Okay, I want to go to their slide in their investor presentation, which they just updated. So if I do the math on their cost per coin, it looks like, and I had to use a little bit of estimating because they do have 2 different sources of revenue, but it looks to me like they're spending somewhere between $23,000 and $25,000 per coin in direct costs. That's cash costs, not including depreciation. So you can see down at these numbers where Bitcoin has gotten to, we're in the $21,000 range right now. It's costing them more than that to mine a Bitcoin. Now, of course, for a bunch of the second quarter, Bitcoin was higher than that. It was more in the $30,000 range. So they did have a gross profit, but you can see why they mentioned that they want to reduce their direct costs because their cost per Bitcoin is just too much. Okay, the next thing I want to grab off of this is going to relate to their cash situation. So this is their accounts payable. This is current liabilities. You'll see this number increased from $14 million to $47 million. That's a $33 million increase in their current liabilities, their accounts payable. So I'm going to show you what that means is essentially, from an operational standpoint, they did not pay the majority of their bills in the first quarter. So I assume they paid all their payroll and things like that. So $33 million. So they generated $33 million from operating activities. So that means they were cash flow positive from operations. But remember, they increased their accounts payable by $33 million. So that is the cash flow that was provided. So in other words, they collected their revenue and essentially they didn't pay the majority of their bills. And again, that requires a deeper dive. I'm not sure which bills they paid or which bills they didn't pay, but these are current liabilities that increased by $33 million. So outside of paying payroll and a few other things, I'm not sure what the situation is here. And I would have liked some more disclosure as to exactly how that all worked out. It does look like they took this $33 million and they invested it. So you'll see they used $53 million in investing activities. So that's kind of a good news, bad news situation. The good news is they did pay off most of what they owe on the machines that they've purchase ordered. So they're going to get their machines are going to be delivered, and that's going to help them reach their exahash goals. This is another slide in their most recent presentation, and what I want to focus on is July 2022. So they say they have 590 megawatts capacity of energy. Their total exahash rate online is 1.7 exahash. Bitcoin mined production per day, 7.5 Bitcoin per day. And then they put note 1. So my frustration with this is it's now late in August. This is the first month of the year. They did not provide the number of Bitcoin that they mined in the month of July. So 7.5 Bitcoin per day times 31 days in July would be 232 Bitcoin. I do not believe they mined 232 Bitcoin, or that is what they would have led with. That would be their record. That would be great news. Instead, they have not told us at all. I suspect as a function of the fact of their growing current liabilities, it's possible they've been having to scale down operations. So from May to June, they went from 185 Bitcoin mined to 124 Bitcoin mined. I would not be surprised if ultimately we find out that in July, they mined even significantly less than that. So that was one of the questions I had coming in. What was their Bitcoin mined in July? Not only didn't they answer it, but they gave us an estimate that we know is most likely not at all accurate. In fact, there's a disclaimer here that you can't read that basically says the actual results are likely to vary in a negative manner. So that's in this fine print down here. Okay, so if I look at their balance sheet, this is something we've done for all the Bitcoin miners. So a lot of the Bitcoin miners that we follow, what I like to look at is a very strong, healthy balance sheet. That's one of 2 or 3 key items for me when I'm investing. So again, this is not financial advice. You guys have to have your own parameters and get comfortable with these companies and do your own due diligence. But for me, a strong balance sheet is an important thing in the Bitcoin mining industry because, right now we're at a very low Bitcoin price. So it's all about liquidity. So this liquidity that a lot of these companies have is key to getting them from point A to point B. Now, if we look at Mawson, you're going to see their total current assets are $12 million. Their total cash was $2.4 million. So if I go down to their current liabilities, Number one, just their accounts payable is $47 million. They have almost another $20 million in borrowing, so that's total current liabilities of $68 million versus total current assets of $12 million. That is a 1-to-5 ratio. Most of the companies that we look at have the opposite of that, a 5-to-1 ratio, more current assets than liabilities. Some have even greater than 10-to-1. So Mawson is in an upside down situation in the short term. And I want to read what they put in their 10Q this quarter. Okay, going concern. For the 6-month period ended June 30th, 2022, the company incurred a loss after taxes of $13.98 million. And as of June 30th, had current liabilities of $55.96 million and an accumulated deficit of $82.95 million. The company's cash position at June 30th was $2.5 million. These conditions raise substantial doubt upon the company's ability to continue as a going concern for at least a year from the date of approval of these unaudited, consolidated financial statements. So essentially what that means for those non-accountants out there, a going concern means that you are assumed there is great doubt as to whether or not they're able to survive over the next year. So that's, the potential of going out of business. So they go on to say, and you can see they have a massive cash deficit. So they need to address how are they going to close that cash deficit. Now, we did see they raised $10 million after the end of the quarter. So they're about $50 million short from current assets to current liabilities. That takes care of about $10 million right there. So they go on to say that the company's plans include improving profitability and generating sufficient cash flow from operations. Management of the company is of the opinion that the company can continue to access adequate debt and equity funding to meet its working capital requirements. Then they talk about the fact that they have a $100 million at-the-market shelf offering. This company has a $55 million market cap. That's going to double the number of shares they have outstanding at the current share price. And if they were to issue that many new shares, it's likely the share price would go down substantially. So I do feel like this company is in a bind. Now, it doesn't mean they can't get out of it. There is good news. They've got a lot of their equipment set up, in place, paid for. They've got more that's going to be delivered. But again, for me, I'm looking at this going concern, and this does have me deeply concerned. So, this is not my opinion. This is management saying we don't know if we can last for the next year. Lastly, their relationship with Celsius Mining. All they really said on the conference call is that their co-hosting business is going as planned, no deviations. So I'm not sure how that's possible. So how are they paying the amount due to Mawson for hosting their machines? So I don't know what the answer to that is. That is a mystery as well. So I feel like the 3 big questions I had didn't really get answered. So I don't want to be negative about this, but obviously, I have a lot of concerns, and so does management, including a going concern comment prefacing their financial statements. So this is a company that has some work to do. Lastly, I'm just going to spend 1 minute on their chart. So if I zoom out, you'll see that this company, from its 52-week high, which was just in September of 2021, so just under a year ago, they are down over 95%. So a lot of what I have just talked about is clearly already priced in. I mean, down 95 or 96%. This company is priced at going out of business. So I'm going to leave it at that. That's what I got for you on Mawson and their second quarter earnings. Thanks so much for watching. If you made it this far, remember to subscribe and smash the like button, and we will see you in the next video.